Okay, so now we look at the next non-current liabilities, that is the mortgage payable. Okay, what is mortgage payable actually? Okay, mortgage payable is actually a long-term debt. Okay, so the amount is actually very huge. It's a very large amount of money, so they need to back up the uh, loan that is given to the company with a security interest. In specific, is actually in a form of property. So mortgage is actually gadai janji, right? So gadai janji means you need to collateral something that is specifically your property, so that if you are not able to pay for the debts, the financing company or the bank will take over your properties. Okay, so the mortgage states that the borrower promises to transfer the legal title to specific asset if the mortgage isn't paid on schedule. So kalau kita gagal bayar, so bank ataupun syarikat kewangan akan tarik aset yang kita letak sebagai gadaian tadi. Alright, okay, so how do we make payments for our mortgage? Okay, so payment for mortgage is actually a fixed amount of payment. Alright, so the fixed amount of payment, we call it as installment, bayaran ansuran. Okay, so in that installment payment, okay, we actually include the principal, partial of the principal, and the interest expense as well. So you will be paying that every month. So let's say the interest expense for 1 year is 12%. So every month you will be paying 1% of interest expense. Okay, so how do we go about with the payments of the mortgage? All right, so we will debit interest expense. Okay, that is the amount that of the interest that you need to pay for that particular month. Okay, at the same time you are actually paying partial of the mortgage. Okay, so why is it still mortgage payable? Because you haven't made the full payment yet, so you are still paying the mortgage in staggered, right? So the amount will be credited either from your bank account or your cash account. So most probably we'll be using bank accounts because it is more convenient to pay for your debts using your bank accounts. Okay, all right, we look at example 9. Okay, Warisan Nusantara issues a 200,000 12% 10 years mortgage. All right, so this company issues a 200,000 ringgit of mortgage, okay, with the interest rate of 12% per year. Okay, 12% per year means 1% for every month. Okay, and the mortgage will be paid fully after 10 years. Right, so you are obligated to pay the payments for the installment. Okay, installment for the mortgage for 10 years. Okay, and this mortgage was issued on December 21st 2014. Okay, why does this company issue a mortgage? Because they need financing, they need the money. Okay, for something lah. Okay, in this question they need the money to do a new research on laboratory. Okay, so monthly installment is a fixed amount. So every month this company will be paying 2,057 ringgit. Okay, so this 2,057 ringgit is inclusive of the interest, that is 12% per annum. Okay, so how do we go about with the payments? Okay, you need to segregate the interest expense and the principal you are paying every month, because from this amount, this 2,057 ringgit, actually you are paying for two things. You are actually paying for the principal, and at the same time you are paying for the interest also. Okay, so we need to know how much you are paying for the principal and how much you are paying for the interest. Okay, so first thing, you need to prepare an installment payment schedule. Okay, so the question asks you to prepare an installment payment schedule for the first 4 months. Alright, and we need to round up our answer to the nearest ringgit, so there won't be any shillings lah. Alright, okay, and then you need to prepare the journal entry to record the fourth installment, bayaran ansuran yang keempat. Alright, okay, so how do I prepare the schedule? Okay, first of all, your payment starts, the first payment that you are going to pay is actually 2,057 ringgit. Okay, from this 2,057 ringgit, okay, actually you are paying for the interest. Okay, how much is actually the interest? Okay, you are given in the question, the interest is actually 12%. Okay, this is 12% per year. That means for 1 month, the interest is actually 1%. So the amount borrowed earlier was 200,000. So this 200,000 multiplied by 1% for 1 month, that means the interest that you are paying every month is 2,000 ringgit. So from this amount, 2,057, okay, for the first month, actually you are paying 2,000 ringgit for the interest, that is 1%, and the balance of it is actually 57 ringgit, is partial of the installment. So that means earlier you borrowed 200,000. Okay, so for the first month you already pay 57 from your principal. It's a very small amount of money, okay, but that is how installment payment goes. Okay, so what happened here is, right, that 57 ringgit will be deducted from the 200,000 ringgit. Okay, so this amount, you will deduct 57 ringgit during the first month. So after you made the first payment of the installment, okay, you still owe 199 ringgit, 943 ringgit to the bank. Okay, alright, so the second month you'll be paying the same amount, that is 2,057. Okay, so we will calculate the interest expense for the second month using the principal balance. So here I will multiply this amount with 1%, and I need to round up my answer. So that 1% is actually 1,999. Okay, so you have a balance of 199,000. This is a balance of your principal, 199,943, and you already paid 58 ringgit during the second month of the installment. Okay, so that leaves you with a balance of 199 ringgit 885 on the second month of the installment payment. Alright, okay, so now I'm going to make payments for the third month. So the third month I am also paying the same amount, 2,057. So how much is actually the interest for the third month when I'm paying 2,057? Okay, so we will calculate the interest from the balance, that is 199,885. Okay, so 199,885, the interest is actually, you will round out the number, right? Okay, so it is actually 1,999 as well. Okay, so as you can see here, okay, the amount that you need to pay on the third month is 2,057. From this 2,057, okay, 1,999 you are actually paying for the interest, and the balance of it, okay, that is also 58 ringgit is the payment for the principal. Okay, so earlier you have a balance of 1,999,885. Okay, so after paying 58 ringgit, so you still have a balance of 199 ringgit 827 199,827 ringgit. Okay, okay. So on the fourth month, bulan yang keempat, we are still going to pay the same amount, that is 2057. So from this 2057, okay, the interest is 1%. So we will take this amount, right, and we will multiply by 1%. Okay, so the amount 199,827 times 1% will be 1,998. Sorry. Okay, so that amount is actually the interest for the fourth month. So you are paying 2057. Okay, but the interest is 1998. So 2057 minus 1998. So that means the principal that you are paying on the fourth month, during the fourth month, is actually 59 ringgit. So that leaves you the balance of 199,768 until you made the fourth installment. Okay, so this is how you show the calculation in your mortgage table. Okay, so we are to record the fourth installment. So the one that we are going to record is this one here. Okay, so how do I record the one that I highlighted in the table? So the date will be, when is it? Okay, it's not stated in the question, right? Okay, but unless it's stated in the question, you need to write down the date. Okay, you are paying for 2057. Okay, so that means I will debit interest expense with the amount of 59 ringgit, and then I am paying for the principal as well. Okay, the interest expense is 1,998 ringgit. The interest, the mortgage, the principal of the mortgage is 59 ringgit. So all this brings you to 2057. Okay, so as you can see here, you are actually paying more for your interest because the tenure is very long. It's for 10 years. So for the first 2 years, actually you are paying more on the interest expense alone, okay, compared to paying the principal. Okay, so as you can see in the table, we are also paying for the principal every month, but with a smaller amount of money from the installment, the fixed installment that is given in the question. All right, so that is how we make payments and how we journalize our mortgage payable.